So, did you know that if you're involved in trade, business, profession, or vocation, you can claim for trade losses previously incurred? Well, on this week's Talk Tax, I'll be explaining to you the general rules that must be followed when you're claiming relief for loss for taxation purposes, of course. Welcome to Talk Tax. When operating a business, there is a possibility of incurring losses. Now, this is when the business expenses outweigh your profits or revenues. As a self-employed individual, knowing taxation rules allow for losses to be reclaimed, and how to do so is very important when you're preparing your financial statements, of course. Now, you may ask, how do I know that I have losses that can be reclaimed, and how can I reclaim these losses? That's a good question. Well, let me explain to you the general rules and procedures when you're reclaiming losses. Well, let me go to Section 19 of the Income Tax Act of Chapter 8101. It provides for taxpayers to benefit from a relief in the form of a credit or loss previously incurred. A loss incurred is in reference to your net loss instead of your net profits from your business activity. Now, a self-employed person who has net loss must be aware of the following. Where a loss was incurred by an individual who is involved in trade, business, profession, or vocation, the amount of the loss shall be carried forward and set off against the chargeable income in the year or years until it is recovered. You didn't know that, did you? Yes, you heard me correctly. The losses you incurred in your business operations from the previous year can be reclaimed from the net profits earned in future years until it is completely recovered. However, when you're computing the chargeable income of the individual, the loss allowed to be set off shall not exceed the gains or profits for the year of assessment. That is to say, an individual cannot claim for losses which exceeds the profits they gained in any accounting year. Now, I must point out, there are many instances where self-employed persons may have several sources of income which arise from different types of business activities. Further, any loss arising from one source within a source of income can be set off against profits arising from another business of the same source. You didn't know that, did you? So here's an example. A loss from a shopkeeping business can be set off against profits earned from a carpentry business, since both of them fall under the same source, which is trade. However, the loss cannot be set off against profits earned from farming. That is simply because farming falls under a different source, which is cultivation of land. In other words, the source of income must be the same for the set-off to be granted. For taxation purposes, here's what I mean by sources of income. It could be profits or losses from the working of estates or the occupation or cultivation of rental of land of every description, profits or losses from any trade, business, profession, or vocation, partnership income. It could be salary or wages, fees, etc. from or through the public treasury, salary or wages, fees, etc. from sources other than the public treasury. It could be dividends, interest, or discounts from sources within Guyana or out of Guyana. It could be all charges or annuities arising in Guyana or elsewhere, or it could be all rents, royalties, premiums, and other profits arriving from property in Guyana or elsewhere. Another rule to note is set-off of loss is allowed to the extent that the tax payable in any year must not be reduced to less than 1/2 or 50% of the amount of tax which would have been payable if the set-off was not allowed. However, if after granting 50% of the losses in any year of assessment and a balance of loss remains, the remaining loss must be carried forward and set off against profits in subsequent years until fully recovered. Now, that's very important. A person who wishes to claim for loss relief should ensure that they submit a true and correct return from all sources for the current year, together with a schedule of loss incurred for the previous year. It's therefore important for taxpayers to understand how to account for losses so as to minimize errors in their financial statements. To learn more on loss relief, visit our website or contact our Tax Advisory Services Department. You can check out our videos on YouTube or our social media platforms to learn more.